Welcome to House Luck's Estate, your go-to channel for everything finance and economics. Today we're stepping into the vast, intricate world of global debt. It's a topic that circles around a mind-boggling figure, $226 trillion. Yes, you heard it right, the world owes this colossal amount to itself. But what does that even mean? How does the planet owe money to itself? Over the next 10 minutes, we're going to unravel this enigma. We'll explore the concept of global debt, its scale, and the intriguing dynamics of how the world can be both a debtor and a creditor to itself. We'll also dissect the implications of this debt and what it means for economies worldwide. So fasten your seatbelts as we journey through the labyrinth of global economics, where numbers take on a life of their own. In the next few minutes, we'll delve into the fascinating world of global debt, a topic that's as intriguing as it is complex. To understand how the world owes $226 trillion to itself, we first need to understand what global debt is. Global debt, in the simplest terms, is the total amount of debt owed by all the governments, corporations, and individuals in the world. It's a cumulative sum of various types of debts, including government bonds, corporate loans, and household debts. Now let's delve into why countries borrow money. Countries, much like individuals or corporations, often need to borrow money to finance their needs and goals. This could be for a multitude of reasons, such as funding infrastructure projects, supporting economic growth, or even covering shortfalls in their budgets. But who lends this money? Well, countries borrow from various sources. They could borrow from international organizations like the World Bank or the International Monetary Fund. They could borrow from other countries, or even from their own citizens by issuing government bonds. In essence, when a country borrows money, it's promising to pay it back with interest. This promise is often backed by the country's economic strength and its ability to generate income in the future. So, why is it called global debt? Well, in this interconnected world, the debt of one country often becomes the asset of another. For example, when China buys U.S. government bonds, the U.S. debt becomes an asset for China. This interlinking of debts and assets across borders is what makes it global. However, it's essential to remember that global debt is not inherently bad. Borrowing can stimulate economic growth and development, but like anything, it needs to be managed responsibly. Excessive or irresponsible borrowing can lead to financial crises, as we've seen in the past. As you can see, global debt is a complex web of financial obligations that spans the entire globe. It's a fascinating topic, filled with intricacies and implications that affect us all, whether we realize it or not, and that's what we'll continue to unravel in this series. Now that we understand what global debt is, let's grasp the scale of it. Picture this. The global debt currently stands at a whopping $226 trillion. That's a figure with 12 zeros, ladies and gentlemen. To truly comprehend this astronomical figure, let's put it into perspective. If we were to stack 226 trillion $1 bills, the pile would reach approximately 17,000 miles high. That's more than twice the Earth's diameter. Or think of it this way. If we were to distribute this debt evenly among every living person on Earth, each individual would owe more than $29,000. That's more than the average annual income of many people in developing countries. Now let's compare the global debt to the world's gross domestic product, or GDP. The global GDP is the total value of all goods and services produced over a certain period. In 2023, the world's GDP was estimated to be about $88 trillion. This means that the global debt is more than 2.5 times the entire world's GDP. Put another way, for every dollar the world produces, it owes $2.57. Comparing the global debt to the world's total wealth gives us another perspective. The total wealth of the world, which includes all the assets owned by individuals, businesses, and governments, was estimated to be around $400 trillion in 2023. This means that the global debt is more than half of the total wealth of the world. These comparisons help us understand the enormity of the global debt. It's not just a number, it's a reflection of the economic challenges we face. This debt influences everything from the stability of financial markets and inflation rates to the fiscal policies of individual countries and the financial well-being of individuals. With such staggering figures, it's clear that global debt is a significant economic issue. Now comes the question, how does the world owe money to itself? Well, let's break it down. Imagine a group of friends who regularly loan each other small amounts of money. Sometimes Alice lends to Bob, other times Bob lends to Charlie, and sometimes Charlie lends back to Alice. In this scenario, each friend both owes money and is owed money. A similar situation happens on a much grander scale among the countries of our planet. The world economy is interconnected through a web of financial transactions, with countries regularly lending to and borrowing from each other. It's not uncommon for a country to be in debt to another while simultaneously lending to a third. Take the United States, for example. It's the world's largest debtor nation, owing trillions of dollars to other countries. China, on the other hand, is one of the world's largest creditor nations, holding a significant amount of U.S. debt. But here's the twist. China also borrows money from other countries. So how is this possible? Well, it's all about managing economic balance. Countries borrow to finance their spending and stimulate their economies. They lend to invest their surplus funds and earn interest. This constant borrowing and lending create a situation where, on a global scale, the world essentially owes money to itself. The key here is that the money doesn't just disappear into a black hole. It's continuously circulating through the global economy, creating jobs, funding public services, and stimulating economic growth. However, this doesn't mean that the system is without its challenges. The dynamics of global debt are complex and constantly shifting. They are influenced by a multitude of factors, including economic policies, geopolitical tensions, and even global crises. Despite these complexities, the fundamental principle remains the same. Just as Alice, Bob, and Charlie keep lending to and borrowing from each other, so do the countries of the world. And just like our group of friends, the world, in essence, owes money to itself. It's a fascinating, somewhat paradoxical situation, isn't it? Let's now turn our attention to the implications of this massive global debt. This whopping figure, $226 trillion, is not just a number. It carries with it a multitude of potential consequences that could ripple through our economies, our financial stability, and even the lives of future generations. First, let's consider the impact on economic growth. High levels of debt can weigh heavily on a country's economy. In order to service this debt, governments may need to raise taxes or cut spending, which can slow down economic growth. In some cases, it can even lead to a vicious cycle of borrowing and spending that could spiral out of control. Next, let's talk about financial stability. High global debt levels can also pose significant risks to the stability of the global financial system. When debt levels are high, it leaves less room for governments and businesses to maneuver in times of economic downturns. In essence, it reduces their financial resilience to shocks and uncertainties. This could potentially lead to financial crises that can have far-reaching effects on economies around the world. Lastly, we can't ignore the implications for future generations. The debt we accumulate today is essentially a burden that we pass on to our children and grandchildren. They will be the ones who will have to shoulder the responsibility of paying off this debt or face the consequences of defaulting on it. This could potentially limit their opportunities and the resources available to them in the future. So as we can see, the implications of global debt are not confined to the realms of finance and economics. They touch upon the very fabric of our societies, affecting the lives of individuals and communities around the world. It's not just about numbers on a balance sheet, but about the well-being and prosperity of future generations. It's clear that the implications of global debt are far-reaching and could potentially impact us all. We've covered a lot of ground today, from understanding what global debt is to exploring its implications. We've learned that global debt is the accumulation of borrowed money by governments, corporations, and individuals worldwide, and it currently stands at a staggering $226 trillion. This figure is mind-boggling, as it is larger than the entire global economy. We shed light on the paradox of how the world can owe money to itself. This owes to the complex global financial system that involves a web of borrowers and lenders. Debt in itself isn't bad. It fuels economic growth and development, but unchecked and unsustainable debt levels can lead to economic instability. The implications of global debt are far-reaching, affecting everything from individual livelihoods to national economies and global financial markets. Thank you for joining us on this journey into the world of global debt. Remember to subscribe to House Lux Estate for more insightful videos like this one.